Hi everybody, this is Lara with your end of the week video for the S&P 500 for the trading week ending Friday 7th of June. I am still expecting the low of December 2018 to remain intact. I'm expecting that the last downward movement and reasonable pullback has ended, and I have a new target for a third wave up at 3104 to be met in coming weeks. The alternate wave count is seriously reduced in probability, and I'm probably not going to spend too much time on it this week. Now, before I get into weekly charts, I want to go and have a quick look at monthly charts because I want to look at the structure of Super Cycle Wave 5 because it's got a long extended first wave within it, and I'm expecting that we are seeing within Cycle Wave 5 a smaller fractal of that unfolding. So let's quickly take a look. This is the second monthly chart. I need to move this over there so you can see it. So here is the start of Super Cycle Wave 5. This is my second monthly chart. This is my first monthly chart. They're identical up to this point here. I'm seeing the end of a Super Cycle Wave 3 here, the dot-com crash, A, B, global financial crisis, C, for a super cycle fourth wave, a flat correction, 3, 3, 5. So the basic Elliott wave pattern is 5 steps forward, followed by 3 steps back. And here we have the third, fourth, and the fifth step forward. When this is all done, I'll expect a huge 3 steps back. But we are not there yet. The structure of the last fifth wave is incomplete. This wave count labels it Super Cycle Wave 5, beginning here in March 2009, and it's unfolding as an impulse, and the impulse has a long extended first wave. On this first monthly chart, I'm labeling Super Cycle Wave 5 with cycle 1, 2, 3, 4 here. On the second monthly chart, identical to this point here, and now I've moved the degree of labeling within Super Cycle 5 all down 1 degree. But it still has a long extended first wave, second wave combination, third wave impulse, which is shorter than the first wave. This is really important. Fourth wave, double zigzag, final fifth wave. Let's take a look now at the weekly chart, and we're going to see it from the end of the second wave here, which for this count is labelled primary 2, and for the first count is labelled cycle 2. So this low here, this point here. So there was a long extended first wave, a second wave combination over here, a third wave is shorter than the first wave, a fourth wave double zigzag offers perfect alternation with the second wave combination, the fourth wave is over here, and the fifth wave is beginning. I am expecting that the fifth wave will show as a smaller fractal of the whole Super Cycle Wave 5. I am expecting it will have a long extended first wave, the second wave now complete, a shorter third wave, and then we'll have a fourth wave consolidation, which should probably be quite shallow, and then a shorter still fifth wave. And so that's why my targets for primary wave 3 for this count are going to be relatively low, and I am not going to be expecting primary 3 to be longer than primary 1, because if that happens, this limit would have to be exceeded for the structure to complete. I hope that makes sense. Let's have a quick look back at that monthly chart. We've got a long first wave, second wave combination, third wave is shorter than the first wave, the fifth wave begins here, and so for a core Elliott wave rule stating that this third wave may not be the shortest out of 1, 3 and 5, for that rule to be met, the fifth wave may not be longer than equality in length with the third wave. The limit is at 3477.39. In order for that limit to be met within the fifth wave now, because it has a long extended first wave, I am expecting the third wave will be shorter than the first, and the fifth wave will be shorter still, because otherwise if the third wave was going to be 1.618 or 2.618 the length of the first wave, that would exceed the limit for the bigger picture. Now, just for members' notice, I also do have a couple of alternate wave counts at the monthly chart level, which do not have a limit. They are much more bullish. But I have much more confidence in this wave count than those alternates because it has such a beautiful fit, particularly with the trend channel. I've drawn the channel from the end of cycle 1, which is off to the left of the chart. I just showed you where it is on the monthly chart, to the end of 3. That's how the first trend line is drawn. And then a parallel copy is placed on the end of 2. And when you do that, it perfectly shows where 4 found support. It also has an overshoot for the middle of the third wave. And that's the strongest portion of the bull market to date, because it overshoots the channel. It's got the strongest momentum. It's ended with almost a blow-off top, a little bit of commodity-like behaviour there, just for the middle of a third wave. And so because that channel has such a perfect fit, it looks like the ends of 1, 2, 3 and 4 are correctly labelled, no matter what degree we give them, and so that gives me a little bit of confidence that I've got that part of the wave count right. So let's look for a possible smaller fractal here for cycle wave 5. 1, 2 now probably ended. Now I'm looking for 3 to make new all-time highs. Then we'll have some consolidation for 4 and a final 5th wave. Let's take a look now at how 1 and 2 are unfolding at the daily chart level from this low here, this point down here. Here's a long extended first wave. The second wave fits perfectly as a zigzag, and it looks complete, and now the third wave is beginning with a little bit of strength. The target for it is to reach only 0.618 the length of the first wave at 3104. When the third wave is complete, I'll then expect a fourth wave to be a relatively shallow consolidation, to exhibit alternation with 2 in structure, and it must remain above first wave price territory. What that means is any long positions which are entered before 3 moves beyond the end of 1. If your horizon is a longer term horizon in terms of your trading style, when that happens, if you enter your long position before 3 moves beyond the end of 1, it can be held throughout 4 and into 5, because 4 should remain above first wave price territory. For now, 3 has not moved beyond the end of 1. It may only subdivide as an impulse, and within it, no second wave correction may move beyond its start below the invalidation point. Along the way up, a new high above the confidence point now would invalidate the bearish alternate wave count, and that would add confidence to the bigger picture for this main wave count that expects new all-time highs in coming weeks. At the hourly chart level, here's the end of 2, and here's the beginning of primary wave 3. I'm now just focusing on the first wave up at intermediate degree, and I'm labelling it 1, 2, 3, 4, and then a final 5th wave. 4 could continue a little further sideways or lower. It might find support about the lower edge of this best fit channel. It doesn't have to. 5 could be relatively short, or it could be close to even in length with 3, but 5 is going to be limited to no longer than equality in length with 3, because 3 is shorter than 1, and here again we may see a smaller fractal, and I see this pattern beginning to be repeated a little bit more for the S&P. A longer first wave, a shorter third wave, and a shorter still 5th wave. The 5th wave, as soon as it moves beyond the end of the third wave, look out for a potential quick reversal. When intermediate wave 1 is a complete 5-wave impulse, I'll then expect a pullback, a deeper pullback for intermediate wave 2. It doesn't have to be deep. I'll probably be using the 0.382 Fibonacci ratio as a more likely target. We're not there yet. When intermediate wave 1 is complete and intermediate wave 2 begins, the invalidation point will move down to the start of intermediate wave 1, and I'll draw a Fibonacci retracement along the length of 1. But for now, when markets open next week, for the short term, I'll expect possibly a bit of sideways movement for minor 4, or a little bit of downward movement for minor 4, which may not move into wave 1 price territory below the invalidation point. I'm drawing the best fit channel from 1 to 3 with a copy not on the end of 2. I'm pulling it down to contain all of this movement. The S&P doesn't always fit really nicely within its trend channels. It can breach channels in bullish movements only to then turn around and continue in the main direction upward and sometimes hug the lower edge of those channels. So this lower edge might provide a little support when markets open next week, but only if it's breached by strong downward movement, not sideways. It has to be strong downward movement, what I consider possibly labelling intermediate wave 1 complete. We are not there yet. I expect overall it may need a little bit more upward movement first. At the weekly chart level, this wave count is identical to the first with one exception, the degree of labelling. As I showed you just briefly on those monthly charts, from March 2009, all of this bull market, I have moved the degree of labelling down 1 degree. Limits, targets and validation points are exactly the same, but when the final fifth wave is complete, the implication of what happens after that is going to be very different. This wave count expects the impulse here to complete 1, 2, 3, 4, 5. It's not done yet. It needs to complete further. When it's done, this wave count expects possibly a relatively shallow and relatively brief little bear market, maybe to meet the technical definition of a bull requirement that for a bear market that price retrace 20% of market value to meet the definition, and then when the structure is done, a resumption of the bull market and the start of a third wave up at cycle degree. So overall, for the longer term, for the next 10 or so years, this is a much more bullish wave count than my first one. But the structure and all of these price points are exactly the same. At the daily chart level, this is a more bearish alternate. I have moved the degree of labelling within this final wave up 1 degree here. I'm just going to quickly go back to that last weekly chart. The difference between this one and the next one, they are identical to this point here, but instead of seeing this as only intermediate wave 1 within primary 5, if we move the degree of labelling within this impulse up 1 degree, it's possible that cycle wave 1 could have been over at the last all-time high. This wave count now has a problem at the daily chart level. I think this is quite unlikely. It expects we're going to see a relatively brief, relatively shallow bear market and that it's in its early stages. But the strong upward week this week is reducing the probability of this alternate quite substantially. Let's quickly go to the daily chart. If this is a bear market, it has to begin with 5 wave structures down. We could have 1, 2, 1, 2. We can't count this 1, 2, 3, 4 because 4 can't move into 1 price territory. And so 1, 2, 3 would be incomplete. It may only subdivide as an impulse. 1, 2, 3, 4, 5. 2 may not move beyond the start of 1. But the strength and the size of this second wave correction at minor degree compared to this second wave correction 1 degree higher, intermediate degree, now gives this wave count the wrong look. I expect it will be invalidated fairly quickly next week. So I don't want to spend any more time on that. Okay, let's look at classic technical analysis now. This is a strong upward week. It has support from volume. After a few weeks of downward movement, it completes a strong bullish reversal pattern. With support from volume, that gives me some confidence that we're probably on the way up to new all-time highs. Price does not move in straight lines though. Along the way up, there will be pullbacks and consolidations like this. We can expect that. So once we've had the first one, we can start to draw a channel and find out where they're going to find support. For now, let's use these horizontal lines of support and resistance. For now, let's look for support, strong support about 2,800 for any deeper pullbacks along the way up. On balance, volume remains bullish. RSI remains well in neutral territory. There's plenty of room for price to continue on higher. ADX at this time frame is still below 15, it's declining. It doesn't tell us there is a new trend, but from this low there was a series of higher highs and higher lows, the basic definition of an upward trend. We had a lower low below this swing low here that told us this upward trend here could possibly have ended, and then we had a couple of lower lows and lower highs, but now a strong bullish candle reversal pattern indicates that this previous upward trend has probably returned. And ADX is a lagging indicator that may not have caught up with that yet. We still had that bearish crossover from MACD. It can whipsaw though. It's not always on its own a reliable indicator. At the daily chart level, there was a strong 89%, almost a 90% upward day for this first upward day here. After we had this low back down here, this last gap was closed, indicating it's an exhaustion gap, telling us that this downward pullback at that point had likely ended, particularly with some strength in upward movement. Volume is declining as price is rising, but as I keep noting, that has been a feature of this market now for many months, particularly at higher time frames. When you look at volume on a monthly chart for this bull market, which began in March 2009, it's pretty obvious that volume is declining as price rises. All the textbooks tell us that that's unsustainable, but it has been sustained now for over 10 years. I expect that indicates that there is some weakness in this bull market, and my bigger picture expects it's a final fifth wave, possibly, and that does fit with the view of declining volume. So that's a bit of a concern. There's a lot of weakness in this bull market, and that calls to the bigger picture. But for the short-term picture, this keeps happening, and so I'm not going to give it too much weight. We may get some more upward movement yet before we see a pullback. Support about 2,800. The positive DX line has crossed above the negative DX line. ADX is still declining though, so it is not telling us that there is a trend yet. It tells us there's a potential change here from down back to up. ATR was flat as price was falling here. Usually when the S&P has bearish movements, ATR strongly increases. It did so for the first part of the pullback, and then it flattened off, indicating that at the end of this downward movement there was some weakness, which supports the idea that for the bigger picture this is a counter trend movement within an ongoing upward trend, and I expect that it was over here. On balance volume is giving us bullish signals. This supports the Elliott wave count. RSI remains in neutral territory. There is plenty of room for price to rise. MACD has given a bullish crossover. Stochastics remains in neutral territory. It can reach into overbought, and it can remain there for quite long periods of time when this market trends. What about inverted VIX in the AD line? We were getting bullish divergence here between price and the AD line at the weekly chart level. At this low here, there was no divergence between price and the AD line. This week, price has moved up quite strongly. The AD line has also moved up strongly. The rise in price this week has support from rising market breadth. There is no new short-term divergence at this point. At the daily chart level also, no new short-term divergence. There was mid-term divergence noted here on this day, and this day here. There was a single instance of bullish divergence which assisted us to find the low on that day. Now we're getting some upward movement resulting after that bullish divergence, and so that was quite useful. This high this week has not quite managed to make a new swing high. The AD line has not quite managed to make a new swing high. The rise in price has support from rising market breadth. Breadth is not rising any faster than price. There is no new short-term divergence either way. But the rising breadth supporting rising price is bullish. Inverted VIX shows, however, some short-term bearish divergence. I do give this one less weight than the AD line, and I will give inverted VIX a little weight when it begins to develop multiple divergences. It can develop those divergences before we see a reasonable movement. Here, for example, we had 3 weeks in a row where price moved higher, yet inverted VIX moved lower at the weekly chart level, and that was a strong indication of a deeper pullback which did arrive and now I expect is over. For this week, price has made a short-term high above the previous high 2 weeks prior, yet inverted VIX has not managed to make a corresponding high. That tells us that upward movement within this week has not come with a normal corresponding decline in VIX. Price is rising faster than VIX is able to decline. That's some bearish divergence for the short term, but it can develop further before it's followed by reasonable downward movement. Okay, let's look at the daily chart. We also have a single day now for Friday of bearish divergence between the direction of price and inverted VIX. Price moved higher for Friday, inverted VIX moved lower. That tells us that although price is moving higher, it does not come with a normal decline in VIX. VIX has increased. So now we have some short-term swing highs divergence and a single day of bearish divergence between price and VIX. This can develop further before we see a reasonable pullback in price, and I am expecting it may develop a little further, but it may be a warning of intermediate wave 1 for my Elliott wave count coming to an end sooner rather than later, and a reasonable pullback for intermediate wave 2 may be fairly close on the horizon. So I'll be looking out for that one next week, and I will expect it'll be a counter trend movement, because the larger trend for the S&P I expect does remain upward. That's all from me this week with your S&P analysis. I hope that all of our members are having a most fabulous weekend.